Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. Crude oil steals the spotlight when it comes to energy and midstream plays, but the fact is natural gas accounts for almost a quarter of U.S. energy consumption. When it comes to production, the US is the biggest natural gas provider, and the US has been producing a lot of natural gas. This past May, for example, dry natural gas production, which is used for heating, cooking, cooling, and generating electricity, increased year over year for the 26th consecutive month to 3,196 billion cubic feet. John?
Yeah, thanks, Mo. This level actually represents a 5.5% increase over May 2022 production levels and is the highest level for any month since 1973, when the U.S. Energy Information Administration, or EIA, began tracking dry natural gas production. Gross withdrawals also increased in May, up 5.3% year over year to a record 3.863 billion cubic feet, or a daily run rate of 124.6 billion cubic feet. This also represents the highest daily rate of gross withdrawals of any month since 1980, which is the earliest year in which the EIA started collecting this data. Meanwhile, total exports for the month was 634 billion cubic feet per day, which was up 2.8% over May 2022. It's also the highest natural gas exports for the month since the EIA began tracking this information back in 1973.
For those who are watching, the point is production is at record level as our exports. To get natural gas to domestic and international customers, you need pipelines. And that's exactly what today's income pick, Western Midstream Partners LP, traded on New York Stock Exchange under symbol WES, is known for. John, if you can explain a little bit about what Western Midstream Partners do, and then we'll go in details from there.
Sure. Yeah, Western Midstream is involved, as you sort of hinted, in the gathering, compression, treating, processing, and transportation of natural gas. It gathers, stabilizes, and transports condensate, natural gas, liquids, and crude oil as well. It also buys and sells natural gas, NGLs, and condensate. Its core assets provide midstream services for customers in two of the most active and productive basins in the entire U.S., the Delaware Basin in West Texas and New Mexico, and the DJ Basin in northeastern Colorado. Additional assets and investments in its portfolio are also located in places like South Texas, Utah, Wyoming, and north central Pennsylvania. And just perspective, some of the company's infrastructure includes 23 gathering systems, 71 processing and treatment facilities, 7 natural gas pipelines, and 15,000 miles of pipeline. While energy prices can be volatile, as we all know, 93% of its gas contracts are fee-based, and 100% of its liquid contracts are fee-based. This obviously provides it with direct commodity exposure protection. And as a side, the partnership is majority owned, 50.6%, by energy giant Occidental Petroleum Corp., which is, if you want to look it up, traded on the NYSE under symbol OXY, with the rest, 49.4%, held by public unit holders.
Incomeinvestors.com that this company expanded its West Texas complex, and that should increase the processing capacity by 36%. Explain a little bit about what's happening.
Yeah, in May, the partnership announced it was expanding its West Texas complex with the addition of a new 250,000 million cubic feet per day cryogenic processing plant in the North Loving area of West Texas. It's expected to be in service by the fourth quarter of 2024, which isn't too far away, with production at the West Texas complex to grow from the current 1.54 billion cubic feet per day to 2.09 billion cubic feet per day.
And as for the financials, how did this company do in the first quarter of 2023?
In the first quarter, Western Midstream reported net income of $199 million, or 52 cents per share, and adjusted EBITDA of almost $500 million. The first quarter cash flow from operating activities came in at $302 million, while first quarter free cash flow totaled $141.6 million. Now, at the time, management noted that while it reported record growth in its Delaware Basin, overall natural gas and crude oil throughput actually declined for various reasons, including reduced throughput from its equity investments and poor weather that impacted its legacy Rocky Mountain assets, which are located in Utah and Wyoming. That said, management expects quarterly profitability to gradually improve as throughput increases for the remainder of 2023.
And let's talk about the fun part here. The company increases base distribution by 12.5%. Am I correct?
Yeah, in July, the partnership's board announced a quarterly cash distribution of 0.5625 per unit, or $2.25 per unit on an annualized basis. That base distribution represents a 12.5 increase over the prior quarter's base distribution of 50 cents per unit. Now, a base distribution means that it is a minimum shareholders will take home each quarter. It also means the company will pay out enhanced distributions from time to time as well. It's not a guaranteed thing every quarter. But in the first quarter, it declared a quarterly cash distribution of 0.856 per unit. This included the then, at the time, base distribution of 50 cents per unit and enhanced distribution of 35.5 cents per unit. The enhanced payout was tied to the partnership's 2022 financial performance. So with the extra distribution in the first quarter and increased base distribution in the second quarter, the partnership's current dividend stands at $2.42 per unit, or 8.56 yield. And that's almost triple the current inflation rate of 2.9%.
Let's talk about Western Midstream units. How are they doing in the open market?
Well, in addition to growing its base distribution, Western Midstream Partners units are also on the rise, up 7.5% over the last month alone, 10% over the last 3 months, 11.5% year to date, and 13% year over year. Solid gains, but the outlook for Western Midstream Partners remains robust, with Wall Street analysts providing a 12-month median unit target of $32 per unit and a high estimate of $36 per unit, which is well above current levels, which is near 27.75 cents per unit.
John, thank you so much for talking about Western Midstream Partners. Just to recap, it continues to be a great energy stock, taking advantage of industry-wide tailwinds. The demand for natural gas and NGLs are exceptionally strong. The company has direct commodity exposure protection through its fee-based liquid contracts. It's expanding its operation to meet demand and continues to raise its distribution. That's it for today. We'll be back with another income idea soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.